Good afternoon, ladies and gentlemen. Welcome back to Young Money Investing. It's Sunday afternoon, so it's time for my weekly market prep where I go over some of the major US stock markets to kind of give you a better grasp on, market structure and the direction of the current trend so that you can make better trading decisions and ultimately make more money. Now, if you appreciate this content and you appreciate the fact that I drop it every single Sunday, please go down, smash that like button, let me know that you appreciate it, and let YouTube know that you appreciate it so that they spread it to more people and help this channel grow. Now, with that out of the way, let's go ahead and jump into the charts. Alrighty, now we're starting off on a daily time frame looking at the DXY, the US dollar. You can see that we are kind of playing around with this green consolidation kind of resistance area. Kind of moved up into it, peaked at 104.699 and then had a little bit of a retracement. We do have this purple line, this 20-day moving average coming up below us. We might catch a lift off of that early on this week, and we also have the 50-day moving average below us as well. Now, I do think we are going to come up to the top of this channel and run into the 200-day moving average. That's going to be at about 105.4 or so, somewhere in that vicinity. And then I do think that you will see probably a larger rejection or retracement, possibly back down to this 101.62. For this week specifically, I would kind of keep an eye on this 20-day moving average and see if price action responds to it and moves back up in a bullish direction like so. If we break it, then we also, as I mentioned before, have the 50-day moving average as well. Jumping over to the NASDAQ. NASDAQ has had a really strong couple of days. As you can see, we broke out of this consolidation range right here, moved up into this white line. This is a resistance line at 13,843, and we just kind of busted straight through that. Zooming out just a little bit, the next resistance is not going to step in until about 15,128. So I'm not really sure what to do if you're a swing trader. I would just kind of sit on the sidelines, let this play out, and wait to see how price action reacts to that 15,100 level. If you are a day trader, such as myself, obviously the day-to-day is going to matter less in the overall structure of things, so you might be able to find a good entry and ride this up for about 500-600 points or so. I don't think that we'll really see any sharp retracements before we get to that 128 level, and we are above all of our moving averages. The 20-day moving average is above the 50-day, is above the 200-day, so really just bullish sentiment all around, kind of acting in confluence to what I was talking about with jumping back to the dollar. Possibly a move up and then a move back down. Those two things are inversely correlated, so generally when the dollar gains in strength, when it moves up higher, then you will see stocks go down and vice versa. So I think that as the dollar kind of retraces a little bit, you are going to see, the NASDAQ and other equities move up, and then, they kind of go up and down like an elevator. Moving over to the Russell, looks like the Russell has finally on Friday broken out of this consolidation channel. Really strong close, 3.5% on that Friday. We got out of this consolidation channel above the 200-day moving average, so I think that we are absolutely heading back up to that 1923 level. I would like to see maybe a slight retracement, maybe a move up to about 1864, maybe somewhere about here, and then a move back down to retest, and then higher up to that 1923 level. That would be, for me, kind of the ideal move. We could just move straight up to it, straight go ahead. We could just reverse and head straight back down, but I think that is statistically unlikely. So I would kind of bide my time a little bit on this one, wait for that retest of this consolidation zone. We were trapped in it for quite a while, since the beginning of March essentially, so pretty much 3 whole months we were trapped in there, just now breaking out. And like I said, this was a consolidation zone within a larger kind of consolidation zone, so I think that we are going to move back up. Whether or not we break this 1923 level, obviously the jury is still out on that, but just happy to see the Russell finally moving with some gusto instead of just bouncing back and forth in this very tight range. We're only going from about 1735 to about 1825, so that's a very, very narrow range. And like I said, we were stuck in it for 3 months. Really not great trading opportunities. I mean, you can see even within the framework here, you come down, it's not like you're coming down and going straight back up, down and down, pinballing back and forth. It's come down, sideways action for a long period of time, and then kind of slowly making our way back up, sideways action, slowly making our way back down. This is not good trading conditions, so I don't really touch the Russell for that reason. But I'm just happy to see that we are finally breaking out of this consolidation channel, and I would like to see a retest of this 1923 in the coming weeks. Jumping over to the Dow Jones, looks like my analysis last week was pretty much spot on. I said we had this nice move up, kind of this downward sloping consolidation channel. I thought we might wick this 32,581 level, and we did see a low of 586, so 5 points off. That's nothing for the Dow Jones. And then we are breaking out of that as well. Really strong close on Friday as well, plus 2%. Pretty solid breaking out. I think that we are going to see a move back up to this 34,345, and ultimately even to this higher level, which is at 35,410. This has been resistance since about, even pulling it back here, up, but 1, 2, 3, kind of 4, 5 times we've kind of run into that 34,345 level and been rejected each and every time. Change that back. So you can see kind of right back here, 1, 2, 3, 4, 5, 6, 7 times we've run into that level and been rejected each and every time. I think this may be the time that the Dow Jones is able to break through it and move back up to this 35,400 level. Taking a look at the RSI as well, RSI still has some room to run, running up to the 75 overbought level. I could even see this running a little bit hot into the 80-85 level as we progress to this 35,400 level before eventually kind of off. Now, it is time for the trade of the week. I did look through about 25 stocks before I found something that looked particularly interesting. So this week we are taking a look at Pinterest. The ticker symbol is PINS. Going back here from Friday, April 28th, just about a month, maybe 5 weeks ago, you can see we had earnings, big gap down that day, even though we had green earnings. Very good surprise on the estimate, about 1,500%. Huge positive surprise, and then a very small 1.5% surprise on revenue. I think that this huge gap down, this retracement, we fell, see, from the day before, we fell as much as 23%. I think that's obviously, an overreaction to a positive surprise on earnings, and we are kind of moving back up. Ran all the way into the 200-day moving average and rejected back off a little bit. We do have the 20-day moving average below us, and of course this gap. So what we're going to do is we're going to target this gap fill and potentially even a move slightly higher. I am going to use a Fibonacci here. We'll draw it out from the low here up to the high, and you can see that right at about $23.10, you have some really good opportunity there. That is a 0.38 retracement. You can see it was also support back over here Monday the 13th of March, and then kind of some wicks over here. Seems like a good level to get in, so I think that we'll let this play out, run down to about $23, and I think that you will also see the 20-day moving average kind of step in as well at that point. As far as price targets go, I think that this 618 extension is probably a good place. That's at about $27. That's going to close the gap fill. If you wanted to be slightly more risk-seeking and take a little bit more out of this move, you could let it run until about 29.50 $50, maybe about $29 would put you back up into the highs from February 2nd and March 27th. I think those are probably two areas. You can see that's also pretty much a perfect measured move as you come back up to the 618, which again is at about $27. So we clear all of this out. The position here, long position in at about $23. Let this run up to about $27, and then I would just have this right below the 20-day moving average. You get a 4.5 R multiple or reward to risk ratio. I think that's fairly solid, and you also are looking to take in the vicinity of about 18 to 26-27%, so somewhere between 18 and 27% depending on what exactly your take profit is. I think that's really solid for a swing trade. But remember, just waiting for that to come down to about $23 and hold the 20-day moving average. That's really important. If it doesn't hold the 20-day moving average, this whole trade idea gets validated. And please remember, this is not my financial advice. Do your own research. I am not responsible. If you lose money, don't do anything stupid, and always use a stop loss. Thank you guys so much for watching. I appreciate each and every single one of you. Please go smash that like button if you enjoy this content. It really helps the channel grow. It really helps YouTube know that you appreciate it and show it to other people.